All right, everyone, it's Joe Friday, and as promised, I'm going to do this video to show you how I get my support and resistance levels, and so you guys can learn to identify the important um, points where we may or may not see reversals. So first off, let me just say that uh, it takes a lot of time to read charts and a lot of screen time. And if you're not willing to put in the time and the effort, you're never going to really get proficient at it. Uh, some people try to use, pre-designed programs to note support and resistance on charts, but the real way to learn is to do it mechanically yourself. So forget about all these indicators that may or may not uh, post support and resistance levels, whether they be Darvas boxes or high-low levels, whatever. You really need to do it manually, and at least in my opinion, because that will make you more proficient at this at this trade. And the markets are dynamic, so things are going to change, and so you need to be able to adapt to that quickly. So you need to put the time in, and I'm a big proponent of uh, what they call naked charting, which is what you see right here. That means no indicators, strictly price, because all indicators merely reflect what price is doing. They're not really predictive. Uh, as I like to say, the tail does not wag the dog. So MACD, RSI, whatever it is, they only do what price does. So if you're looking at those indicators to think maybe they have some predictive value, you're going to be waiting a long time because they don't. The only thing they can be used for is potential uh, predictive value, and to the extent you have a divergence. But you still need price to confirm, as I always say. You have these divergences, but in and of themselves, they are not buy or sell signals. You need to have price confirm the divergence, and that's confirmed by either a break of support or resistance. So I would strongly suggest you try charting without any indicators, and once you start to feel comfortable with that, then you can start adding your own indicators that you like as a secondary tool, whether they be moving averages, uh, RSI, MACD, stochastic, whatever it is that you like. Uh, but you see my charts, they're not cluttered. They have very few indicators on them. And I think it's cleaner that way, easier to see price action. And if you have too much stuff on your chart, you're just going to get lost and confused by all the different things that you're trying to look at. Your primary focus must be on price. And I can't say that or emphasize that strong enough. So anyway, I'm going to show you how I go about identifying my support and resistance levels. And usually what I do is I start with a higher time frame. So mostly the weekly, because you can do the monthly, but it's really nobody's trading a monthly chart. So the weekly down to the daily, down to the 4 hour, down to the hour, usually is sufficient. And so once you mark a resistance level on the weekly, you can just go down to the daily next, because what's inside this daily weekly candle are 5 other candles for on the daily, right? That comprise this weekly candle. So they're going to show different levels. So depending on the time frame you're trading, uh, you have to zoom in. So you still need to know the higher time frame, because even if you're trading an hourly time frame and you're approaching a weekly resistance level, you need to know that. And what you can do is either you can color the lines, the support and resistance lines. So let's look at this one here. This is this past week's weekly candle. So that's the high and the low, right? So now you have support and you have your resistance. And this is the weekly, right? So you can, if you zoom down though, you may get lost because all the lines are going to be the same. What you can do is you can color these, or you can make them dashed. So this is the weekly, and when you go down to a low time frame, you start seeing these small dashes. You'll know that that's the higher time frame. Or what you can do is you can make these solid. I mean, it's really up to you, and then use the dashed lines for the lower time frame. So right now, we have 28.19 and 25.76 basically as support and resistance. And now going forward, that is going to be the area you want to see get broken above for a bullish scenario, and broken below for potential bearish scenario. Now you could also, mark these prior weeks if you want, but for our purposes, we're just going to note the current one. As you can see, this level was broken, right? So what I would do, I guess, is I would really only mark this level here as the recent high, weekly high, the next one that is, and here's the next weekly low. And then of course we have this little gap. So all this will come into play as you mark your chart. So for our purposes now, what I'll do is I'm going to use the solid line for weekly, and I'll use the larger dash line for daily, and lower time frames I'll use a smaller dash line. All right, so now we have the weekly here, and you can see now we have the range, right? And remember, support resistance is not a specific per se level where price is going to turn around. It just gives you a general area, and it could fall shy or exceed by a few points. So you got to be aware of that. Don't be confused that it has hit this level immediately and reverse, because sometimes it won't do that. So here we got the weekly, and now what we'll do is we'll go down to the daily. And you can see now when you go down to the daily, we have both support levels from the prior 2 weeks. So this is the weekly zone of resistance, and this is the weekly zone of support. This being last week's low, and this being last week's high. And if you want now, what you do is you can go down here and you say, okay, well, this now is the daily low, basically, from the past couple of days. And you can mark that as a larger dash line. And here is the daily support that was resistance that got broken. Right? So remember, solid line is the weekly, the larger dash line is the daily, and if we go down to the 1 hour, 4 hour, I'll use the smaller lines. So you can see now that last week, once we broke, or I should say last week, the other day, once we broke above the prior 2 days high here at 27.63, it was a bullish move up to 28.19 where we closed, right? Well, high today, we didn't close there. And so the next resistance, should we break above this, is the next weekly level at 28.80. Okay, and this is support. So if we break below 27.63 on the daily, that opens up the door to a drop back down to 26.50s. And if we break the daily support from Wednesday and Thursday, that means it opens up the door to a drop down to the prior week's support at 25.76. And if we break that support, it opens the door to the prior week support at 24.47. And then you have this gap here too, so you can mark that. I would mark that with a daily. And again, it depends how you do it. Some people could use, I used to use white for weekly, so I remember, I saw the white. But if it's too many colors on the chart, sometimes you may want to just use the solid and the dash lines. So okay, so now that we have, basically for the past week, we have our support, or past 2 weeks, we have the weekly highs for the past 2 weeks, with last week's high being here, prior week's high being here, and last week's lows being here, and the prior week's lows being down here. So this is now the daily. If we go down to the 4-hour chart, you can see most of the time the 4 hour is going to be consistent more or less with the daily chart. Although there could be some slight differences, like you can see here, just slightly. But generally speaking, the 4 hour and the daily are usually close. And you can see here we had the 4 hour support on the daily from Friday. This is Thursday, and excuse me, from Thursday. This is Wednesday. This is Tuesday. So the next one down would be the hourly chart. So now here's where you start to see some potential differences, and you kind of got to zoom out a little bit. And let me zoom in a little bit here. So you see now that as you go down, you can see the gap really is down here. And this is an hourly resistance level. Well, it was a resistance, got broken, it gapped up. And you can see more or less, though, the hourly is almost the same as the 4 hour as well, and the weekly, except you do have this minor support here. And lower time frames are just that, minor support. The largest time frames are that was going to give you the more important levels to watch. All right, so you can see now, let me zoom out here. You can see now that if you wanted to kind of identify the areas better, you get out your rectangular box and you say, okay, well, this was a consolidation zone. You can see that, right? So this whole zone here is support. And now this here is starting to consolidate as well. It's only got 2 bars though, so you need to wait a little bit longer. But this is also a potential zone of resistance, just as this was a potential zone before it broke out. And if you zoom out a little further, let me just remove that, and you want to go to the higher time frames, what you would do then is go to the daily, or you could actually go to the weekly, probably a little better, and you could just put a box here and say, okay, well, this is a zone above that needs to get through, and this is a potential zone below. Well, it's a big zone though, because it's had a big movement. It was very volatile. So now if you go down to the daily, you can see how these zones come into play. And within the zones, there are lower time frame areas that you need to watch. So right now, this is the zone to watch above. And you can color these. You want to make this red or make this green. That's totally up to you. And what happens in the zone will dictate whether or not price is going to go higher, or we can expect a rejection. Now, to aid in identifying these, or I should say, to aid in trying to figure out the probabilities of whether or not these support and resistance levels or zones are going to hold, we try to look at other things, right? So, for instance, we could use Fibonacci retracements or extensions, trend lines, and other technical analysis to try to identify points where we have either a cluster or a confluence of resistance or support that would increase the probabilities that that support resistance is going to hold or not. So for instance here, you can see we have these two zones, right? This is support, this is resistance, and just to make it a little more clearer, we have weekly support down here. And you can see this is support because we had a couple of touches here, right? And it held. So again, you know, it could be off a point or two, but just a general area of 2300. And this was the low. Again, this is the weekly, daily. So if I go to a weekly, I'll change that. So I'll use that level instead. So basically about 2300. And the way you try to figure out what the levels are, other than obviously the last candle, is also to look back. Like here you can see that this was support, resistance, because we had rejections here, here, came down, came up, rejected again, and then we broke above it. So when you mark these lines, always try to look to the left, back in time a little bit, to see if that was also support. And you can see here we marked this level as resistance. That was prior support. Once broken, support becomes resistance, and vice versa. Once resistance is broken, it becomes support until broken, right? Pretty simple. So if we go down now to the daily here, you can see we have our weekly zones, weekly levels. Daily levels are the larger dashed lines, and the 1 hour levels here are the dashed lines. So these are like interim support that you may find. But if you're trading the daily chart, it really doesn't matter. Really, you're looking at these lower levels, the larger dashed line. Only when you're trading the lower time frame do you want to be bothered really with the 1 hour. So, like I said, if you want to go to your drawing tools, you can go Fibonacci retracement and plot your fibs. And you can do whatever fibs you want. You could certainly use the 38.2. I usually just use the 50 to 78. So these three, 50, 61, and 78, but you could put 38 if you want. And you would see that 38 actually lined up with one of the daily resistance zones or levels, but it broke through it. So now I'll just take that one off because it's really not relevant anymore. It broke through, so it's no longer a resistance. So this now is support on the daily, remember, larger dashed line. And now we have this resistance zone above between 28.19 and 28.80. We have, which happens to fall right, just about right at the 50% fib, but below the 61.8% fib. So this whole zone here is now, we have a confluence of various resistance. So now this increases the odds that this zone is probably going to hold. Not guaranteed, but probabilities favor it because you have more than one point of resistance or indication of resistance that it has to get through. And if we do get rejected somewhere here, and it doesn't have to be right at this zone, at this level, it could be higher or even break up into this 29 area, the 61.8 fib, which sets up the A, B, C, right? So that's basically how you do it, and you just have to figure out from there what you want to do. If you think this resistance is going to hold, you can start building a short position. If you think it's going to break through, you can either start adding or you can wait for a breakout and try to go long. Totally up to you on what kind of a trader you are. Whether you're a counter trend or a breakout trader, or breakdown trader. And the same thing here. If we come down into this zone, it's either going to, you think it's going to either hold, in which case you'll start building a long position, or if you think it's not going to hold and it's going to break, you would wait for a break of this support, or start building your shorts here in anticipation that it'll break. But it's always usually more safer to wait for support to break or resistance to break, but that's totally up to you and the risk tolerance that each of you may have. Now, also in this zone, you'll see we have a gap. So we also have now a third area of support here, which is gap support. And you can see that gap support is right here between 25.37 and 25.76. So if that support gets broken, that in other words the gap closes, that's a pretty strong indication that we're probably going to go lower. If we bounce off the top of the gap and it doesn't close, then this support is a little stronger than maybe anticipated. And of course we have gaps all over the place, so we can just put these gaps, we got one down here. We got one up here. And there's like a little small one here. So in any event, this is the gist of it. And if you go down to the, like I said, the smaller time frames, it becomes a little more clear how these levels, how more important these levels are. And if you're trading, a 50-minute chart, you know that this is hourly support, this is daily support, and this is weekly support. So when you start getting to these higher time frame support or resistance levels, you know that that could be some formidable resistance. Now, we've already broken above the 50% fib here. Now we broke back below it, at least on the 15-minute. But this is still a weekly zone up here at 28.19, and that's a tough resistance zone to break. And we don't know if it'll happen or not. So that's why whether this holds or not will dictate whether or not we're going to go higher. But you can see in using just price that you really don't need any indicators to tell you anything. Price is going to tell you just by breaking support or breaking resistance. The indicator is just going to confuse you. The more you have anyway, like I said, you could have one or two. I would suggest strongly trying to practice using just a naked chart. And then you can dress it up a little bit later, as they call a semi-dressed chart with maybe one or two indicators like I use my RSI moving average and the MACD, but that's it. Now you could also always create another chart just to check Bollinger Bands and stuff if that's what you like. But for your, I guess, normal chart that you want to trade off of, all you need is price. Now this is SPX, so let's go over to something else. This works obviously in any instrument. So why don't we go over to gold? Again, we start with the weekly. And we mark our weekly high, weekly low. You can mark this last weekly low if you want. This one doesn't matter no more because it broke above it. And probably use that on a daily for maybe support. These also were prior levels, but they broke above it, so they would be support on the way down perhaps, but you could probably use that on a daily. So if we go down to the daily now, And you can see that now we have support right here, and you can see the reactions, right? Just like I said, it doesn't be exact on the nose, but you can see all these reactions here at this level. And it held, got rejected, boom, came back, couldn't break above it, got rejected. So this level here, give or take a couple of dollars, is the area of was a resistance, which is now support. And like I said before, prior resistance broken, once broken, becomes support. And the same for the other way around. Prior support, once broken, becomes resistance. Like it was here. This was like support for a day maybe, and then it broke down and became resistance. All right, so this is the daily, and you can see we have this high. This was another one, even though this one now takes precedent. So this level is still important, but it's not as important as this level here, because this was the daily from the day before. So I would mark that. And again, this is something you have to practice doing, and you learn what levels are important or not important. You can see we made the high here on the weekly and on the daily, but we closed below Wednesday's high, or right at it. So again, that's how you do it. And here's the daily. Again, if we want to go down that low, but right now we're focusing on this past 2-week range. If you go down to the 4-hour, again, you'll see some spikes here that, from a lower time frame perspective, are noteworthy, but I would mark them with a smaller line. Now, I just use a solid line, but for you guys that are trying out, you can just do what you want, but it makes it easier for you to identify it this way. For me, I always look at the weeklies and dailies on all my charts before anything, so I'm always zooming in and zooming out. So I just use one solid line. And after a while, you get to realize that obviously this is the weekly, because this is the weekly high, because this was the whole week of past few days, and we didn't make it above that, and we didn't make it below here. So this was obviously the weekly low. But you could read that, learn to read that, or you can just mark it separately and distinguish between the different time frames. And if we zoom down now to the hour, you can see these levels more or less correspond with the 4-hour. Now you can come down here and say, oh, I want to know what this level is here. If you want to mark that on the hour, that's fine. But it's an interim level, because it's only on the hourly chart. And so it's not really what I would consider formidable support. But if you're trading, a 15-minute chart, you may want to know where that level is, because if it breaks, then you may want to short on a 15-minute chart. Or you may want to try to go long on a bounce on a 15-minute chart. That's totally up to you guys, but if you're looking at the bigger time frame, it's if you're looking at the bigger time frame, it's still minor support, because the larger time frames support resistance is up here. It's just one move, so it hasn't really had a lot of touches to kind of make it like this, where it's been touched several times over the course of a week. So it's proven itself. It's just one touch on the 4-hour. But on the 15-minute, it's touched a few times, see? So that's why you have to know the difference between the time frames and the support and resistance levels on each. And you go down to a 5-minute, you can see this was resistance, broke, became support, which broke, and now this is support, and it's coming back up. Now this resistance is either going to hold, or it's going to break. But until proven, prior support becomes resistance. So right now, this is probability-wise, it's going to hold. If it breaks through, that's fine. There's not a guarantee. It just gives you a probability of what may or may not happen. All right, so if we go back down to the daily, or up to the daily, I should say, you can see that we're really in this range here between 1670 and 1754, or even 1741, because we didn't close above that. We spiked up during the day yesterday, but we closed that. So this really is the range. Now we can also go to take a look at crude. Let's see what crude looks like. I don't want to make this video too long, but I want to show you that it works across all time frames. So, all right, so we have the high from the week before up here, the high from the week below, the week before, the low from the week before down here, and in this week's weekly high, this week's weekly low. And what I usually do when I mark these is you'll see me sometimes do a supply and demand zone. And there's a little bit of a difference between supply and demand and support and resistance. And I may do that, go over that in a different video. But for now, I just want to go over support and resistance. All right, so now we have the weekly on the chart. We go down to the daily. And you can see that this is the zone here, right? For the past 2 weeks, we've been just chopping around between 19 and 29. So this resistance zone here, if it gets taken out, it's going to be a bullish indication. And you see we have this gap. And let me see if that's on the weekly or not. Yep. But you'll notice this with the gap, and that's why I always tell you guys, you got to zoom down on the gap to get the. I mean, you don't got to go to the 5-minute, but I would go down at least to the 4 hours, not hour, to see the exact level for the gap, because you can see on the weekly, this gap is showing as being 36.25, but really on the daily, you can see it's 34.79, because that's where it opened. The weekly is only going to show you the high. You want to see where it opened, and if you go down to the 4 hours, probably lower than that. Yeah, see, it's down here. So this really is on the 4 hour. The gap doesn't close until about 33.60 area. And I bet if I went down to the 1 hour, maybe even lower. If I can find it, hang on. It's 33.31 on the 1 hour. So for me, I would probably look at the 4 hour for the gap close to get a better picture. And even if I'm off by a few cents, that really is the level that needs the price to get to. And, you know, if you shortchange yourself a little bit and you say, oh, it's 34.79, you can short yourself about $200 a contract between here and here. And that's assuming, of course, that the gap closed on the way down. I'm talking on the way up. So. All right, so go back to the daily. So, like I said, it's a few points, but you know, it's up to you. But if you want to just use it daily, you can do that and use that as the close. But I like to zoom down to at least the 4 hour. All right, so now that we have the daily set and the weekly, and I'll just put this. Make sure I got that right. Yeah, well, actually, the daily and the weekly are almost the same on this one, so I could leave that as a solid. All right, so now you have resistance here on the daily. So now the question is, you know, are we going to go higher or lower? And you can see here we've made a higher high, and now we've made a higher low. So far, this breaks, and we come back down here. Well, then this is no longer a chance to get into an uptrend because an uptrend consists of higher highs and higher lows, or a series of higher highs and higher lows. Downtrend, a series of lower highs and lower lows, lower highs and lower lows. So we don't know yet whether or not this is going to turn into an uptrend because we need to make a higher high. If instead it breaks down and makes a lower low or an equal low, then we know that the uptrend the downtrend is not over. And then it comes down to whether or not this low is going to hold. So if we zoom down now to the 4-hour chart, and you can see we have some interim resistance right here. And again, look to the left. Just don't draw a line. Look at the left. See how many times it touched that spot. And you can move it up a little bit if you want, or a little lower, but I usually use the last point because while it might have extended a little bit above here, you can see it went above it. Here it went above it. The last touch, though, never got that far. So I would use that as the lower time frame resistance area. And the low is the weekly and daily low. In fact, it's the same. So you can't really distinguish by the lines. So you just got to realize that sometimes you'll have the same levels for different time frames. And all of these are just like minor levels to watch, but really unimportant because price went above and price broke below. Here you can see kind of gravitating around this level. So this is a key level here, 25.74 and 25.52. 22.52, I should say. And as you saw on my chart, this was a box, and we broke below the box at 23.50 here. Now you could use this one because this also was a level, even though it got broken. It was a prior level. So you could use that. As another lower time frame level. So if you're trading the hourly chart, you can see that was support, but it broke. Same thing here, see? And now this level here could be a little short-term resistance because this was the high and it couldn't get above it. So you can walk that on a lower time frame as well. And if you went down to like a 5-minute, let's say, you'd see it was support, then it broke, came resistance, and got resistance again, and then broke down. So I'll go back up to the hour chart. And if you guys have any questions, you always can feel free to email me or post them on the private Twitter. I'm happy to answer, try to help you guys out and teach you the best I can. This is not a educational site per se, but I assume you guys are learning from my videos how I approach things, and I don't necessarily have to explain it to you. What I'm doing, you can see it yourself and adopt whatever methods I used for your own trading if you want. All right, so you can see now, just looking at the 4 hour, that we have, the higher time frame levels, and we have the interim ones. If you were trading on a lower time frame, you want to watch out for. But if you're trading, like I said, a 4 hour or a daily, it's really the main levels are the higher time frame ones you want to watch. Everything in between is just noise, which is why I tell you when I do these boxes that in between is just going to be a chop zone. If you're trading a 5-minute chart, maybe you want to trade it. That's not me. I don't do that. I like the bigger moves, so I wait for the bigger levels, because the big moves come off the bigger levels. So the next time I'll do something on supply and demand. Like I said, it's a little bit different than support and resistance. And you can see here, if we go to studies now, and I want to add my RSI moving average, let's click the box, or my MACD, or RSI, whatever you guys want to use. Again, I wouldn't use all of these. I think you just need one. But that's, like I said, that's me. You guys can do whatever you like. I zoom down to an hourly chart here, trying to see while you're looking at price here, you would see that we had this pop up here, but we had this kind of negative divergence, and then we gapped up, we gapped down open. So there was no way you're going to trade that, because you didn't know at that point, because it was in between the open and the close at I guess it was Sunday night open. But your main focus really should be just on price. And if you have these other studies, you just have to take it with a grain of salt. I'm going to take the MACD off here. Just use the RSI. And so again, like I was saying before, you would look for clusters or confluence or resistance. So let me go back to SPX for a minute, and the daily chart, right? So here you can see on the daily we're approaching the 14 RSI moving average. So that was another potential resistance indicator. So you had fibs, you had price support resistance, and you had the RSI moving average, and you also had the RSI, because you could see that was a 50 level, which means price broke above 50. That's what that RSI moving average tells you. And so if you just had the RSI, you would even see we're approaching the mid-level, and that could also be resistance, like it was here and it was here. But sometimes it doesn't hold. And if you go down to the 4 hour, now you can see we're above the RSI moving average on the 4 hour. But you can see the RSI now is getting overbought as we're heading into fib resistance and this zone of resistance. So that's another indication that this area is probably going to hold, or give you a good probability that it's going to hold. So again, it's not so much the RSI itself, you're using that in conjunction with price. Because if price drops, the RSI is going to drop. So but it does give you a clue that you're a little overbought. And while things can stay overbought, sometimes they don't as well. So you don't use it by itself. Use it in conjunction with the cluster or confluence of support or resistance that you may be coming into. Like even here, you can see price was coming down and we hit support, and the RSI was right at that 50 at the oversold area. So another indication that you may have, you may be bottoming here, and that that support's going to hold. And if we go down to the hourly chart, you'll see the same thing. We were coming into resistance. RSI was overbought, and we pulled back. But again, lower time frame, you get smaller moves. Higher time frames, you're going to get the bigger moves. So it depends on what time frame you're trading. And here is Monday's. You can see price came down, kind of hovering around the support for a few hours, and then you see we had the positive divergence here, because we had RSI making a higher low, while price really made just about an equal low. And we have a divergence right now in place here, because we have, at least on the 1 hour, we have RSI with a higher high. And you can see you made a lower high. So come next week, assuming, well, depending on what happens over the weekend, but assuming there's no news and we just continue from Friday, this looks like this is going to head lower. And as it heads lower, the next support is going to be this lower time frame support and the RSI moving average. And here, you got daily support. This is strong support because this is the larger dotted line. And then when you come down here, you got the weekly and the gap support. So that's really what it comes down to. And depending on whether or not you think price is going to go higher or lower, or reverse from support, or that support's going to break, or resistance is going to break or hold, depends on how you want to trade it. So I go back to gold, and same thing. And you can see we have a divergence on the daily here too. We have the RSI with a lower high, even though price made a higher high. So like that, boom. So that's suggesting that we could see a reversal, but of course we need to see support break, whether it's minor support first or major support second. Right now, this major support is key to me. So until 1671 area breaks, there's no reason to short unless you want to short for a small little piece of change here in between the zone. All right, so I think this went on long enough. Hopefully you've found it informative. And like I said, I'll do another one on supply and demand, kind of intertwined with support and resistance, a little different, and I'll work on that video next time. All right, guys, hope you enjoyed it.